Hello, everyone. This is Jim Lucy, Editor-in-Chief for Electrical Wholesaling and Electrical Marketing with the May 23rd edition of the Today's Electrical Economy podcast, sponsored by Champion Fiberglass. The company began producing epoxy fiberglass conduit and fittings in 1988, and in 1999 developed the first conduit from epoxy resins that had flame resistance and low smoke characteristics. This met the most stringent codes and specifications. Electrical Wholesaling's Today's Electrical Economy podcast today offers a sneak peek at some of the most interesting findings in our top 150 distributors survey and explores the most recent electrical product pricing data from Electrical Marketing to Electrical Price Index. We'll also check out some weekly economic indicators and offer you an idea where the market is headed. These 5 weekly indicators are initial unemployment claims at the state level, rail freight car traffic, the Baker Hughes rig count, oil prices, and copper prices. Our thanks again to Champion Fiberglass for the sponsoring of today's Electrical Economy podcast series for 2022. For the week ending May the 14th, the advanced figure for seasonally adjusted initial claims was 218,000, an increase of 21,000 from the previous week's revised level. The 4-week moving average for unemployment claims is 199 and 500, an increase of 8,250 from the previous week's revised average. The unemployment rate through April is 3.6%. These 6 states had the biggest decreases in unemployment claims for the week ending May the 23rd. Georgia was down 558 claims. Arizona decreased 405 claims. Michigan was down 373 claims. The District of Columbia was down 267 claims. Arkansas was down 248 claims. And Colorado was down 212 claims. These 5 states had the most unemployment claims for the week ending May the 23rd. Kentucky was up 6,728 claims. California was up 3,315 claims. Pennsylvania was up 2,102 claims. Illinois was up 1,827 claims. And the state of Ohio was up 1,083 claims. An interesting leading indicator for the overall U.S. economy is freight rail traffic because it's a measure of the amount of raw materials and finished goods being shipped by rail. The best source for this data is the American Association of Railroads, or AAR, which publishes this data weekly at www.aar.org. For the most recent weekly data, total U.S. weekly rail traffic was 505,120 carloads and intermodal units, which is down 5.4% compared with the same time last year. For the first 19 weeks of 2022, total U.S. combined railroad traffic for intermodal units and carloads was 9,370,059, and that's a decrease of 3.5% compared to last year. Over the past couple of reports, we've seen some declines in specific categories of freight, and these declines continued in the most recent report. Many of the freight categories were in the red, with petroleum and petroleum products showing the biggest year-to-date decline versus this time last year, with a 15.6% decline. Grain also came in at 9.6% decline. Total intermodal units was down 7%, and motor vehicle and parts at minus 4.8% also had larger declines. The categories that were showing some growth was chemicals, which was up 6.8%, coal, which is up 6.9%, and non-metallic minerals was up also 6.9%. If you track the oil market, you're probably familiar with the Baker Hughes rig count, which tracks the oil and gas rigs that are operating. This data is available by state, by basin, and nationally at www.rigcount.bakerhughes.com. This slide gives you an idea of the largest oil and gas deposits. It really shows you just how many of the large oil players are in Texas and in Oklahoma, and how big an area the Marcellus gas region covers in Pennsylvania, Ohio, and parts of West Virginia. We saw some pretty significant changes in the rig count data over the past week, and the increase was 14 rigs. 12 of these new rigs are in Texas, with 8 of them in the Permian Basin and 3 of them in the Eagle Ford Basin. Texas currently accounts for 49% of the total U.S. rig count, with the bulk of these rigs in the 2 basins just mentioned. The number of gas rigs in operation has grown steadily over the past 2 years, with a notable spike since the war in Ukraine began and the disruption of natural gas export from Russia. There were 100 rigs operating at the beginning of this year, and the net number for gas rigs is now over 140. Since the Ukrainian war began in late February, the price of natural gas has also increased dramatically. According to data from www.macrotrends.net, the Henry Hub price per million BTUs, which is the common measure of pricing for natural gas, has increased from about $5 to more than $8 since late February. On Monday, May the 23rd, WTI oil prices were approximately $110 per barrel. That's up 11% for the month of May, 45% since the beginning of the year, and up about 66% year over year, according to data on MarketWatch. Economists like to call copper pricing Dr. Copper because of it's a leading economic indicator for future economic activity. Copper is used in many industries, and particularly the construction industry among the leaders, because of its use in wire and cable and copper plumbing pipe. Copper prices have continued to drop over the past few weeks. They had been over the $4.70 per pound mark pretty much consistently since March, but on Monday, May 23rd, they continued to be in the $4.20 range and are currently standing at about $4.25 per pound. While electrical prices are still at or near historical highs, we're starting to see that momentum lessen somewhat. Let's take a look at some of the latest data from Electrical Marketing's Electrical Price Index. Now let's take a look at the Electrical Price Index for April from Electrical Marketing Newsletter. The Electrical Price Index is published every month in Electrical Marketing, which is available to all subscribers for only $99 as an annual subscription. If you're looking to track pricing index for more than 20 different electrical product categories, you can't go wrong with Electrical Marketing's Electrical Price Index. The chart on the left shows the percent change month to month. Up the most were boxes with a 3.6% increase, conduit fittings were up 2.9%, and non-metallic conduit was up 2.9%. Well, they're large increases, but over the past few months, we've seen quite a few more categories were increasing on a monthly basis, more than 2%. And these are relatively and comparatively speaking, smaller increases than we have seen. The chart on the left shows the categories, the products with the biggest increases on a year-over-year basis. Again, we have boxes with an enormous 40.9% increase year-over-year. Also, very large increases were spotted in pole line hardware, up 39.7%. Power wire and cable up 36.3%, ballast up 33.7%, non-metallic conduit up 32.6% year over year, and conduit fittings, the other category, up over 30%, with a 31.9% increase. This slide shows the month-to-month and year-over-year pricing momentum for the electrical price index, for the total index. It takes the average of 27 different electrical products. As you can see, it has the gray line shows the year-over-year change after peaking in earlier this year in January through March at over 19 to 20%. It started to decline a bit in April. We hope that trend does continue. The orange line on the bottom shows the month-to-month change, and as you can see, it returned in April to its average over the past couple of years of about 0.5% increase on a month-to-month basis after a spike in January and February. When Electrical Wholesaling's editors asked the distributors responding to our top 150 survey when they thought some of this crazy pricing activity would return to normal, most of them are not too optimistic about it happening anytime too soon. And 52% of respondents said it wasn't going to they were not going to see any changes in pricing activity until 2023. 27% said there was no end in sight. Much less percent were expecting it to end by the end of the year. These distributor respondents for the top 150 survey are expecting some growth this year, according to the survey, but it's tough to know how much of that growth includes inflation. The chart here shows you that 27% of respondents see growth in the 6% to 10% increase range, which is toward the high end of the industry's average of 4 to 8% growth, not adjusted for inflation. We'll have to see what that inflation number looks like at the end of the year to see how much of an impact it will have on industry sales. Some good news from the survey is that more than half of the distributor respondents reported that the commercial and residential markets are showing decent growth this year. The industrial market is pacing a little bit below these segments, and when asked about specific project types that were the largest in their local markets, data centers were far and away the largest. We also saw a number of distributors reporting on some very large hospital projects, either starting up or on the drawing boards. This concludes our presentation for today. A special thanks to the folks from Champion Fiberglass for sponsoring our podcast series for 2022. Please contact me if there's any type of economic data you would like us to cover in these podcasts. And if you are interested in a subscription to Electrical Marketing Newsletter to get some more on a monthly basis or electrical price index data, you can contact me at jlucy@endeavorb2b.com or 913-461-7679. Our next presentation will be on Monday, June the 6th. Until then, stay healthy, be happy. I look forward to talking with you in 2 weeks.